knowledge and the know-how and the willingness to take the trade. All right. Welcome to StockMarketFunding.com. When we went long Apple, we had a percent DS down here around 19.70 on the 60-minute chart. And I told people that Apple got up here, it clocked at 95.88. And it got too overbought, like Google, like Goldman. And it was a great trade this way, but it got too overbought. And we are short Apple at $224.75. The minute that hit that peak, our senior traders started shorting. And as it went up a little bit, they added more to the short. There's nothing to fear about them going higher against you a little bit in price because you're already stretched to the ceiling and you have to come down. And I'm showing you why. 225 is a high, and we just hit 217 was a low on the day, and he walked it there, and that was a great trade in that 60-minute bar. Right up to the top, but look what happened. You couldn't stay up there. They walked it, and they sold it. You were too overbought. You were too overbought on a 60-minute chart, and this is what it's about. In our mathematical formula, you would have known to short whatever that delta was. The positive ratio is to be sold short because that's where the public is in the top. They're all up here. But in the short term, we've had a 60 and 120-minute reversal. And we got too overbought, percent DS, crossed over, percent DA. We peaked here on that MACD bar, and it's starting to go down in numbers here. And as it goes weaker, that means that the trend is weaker. And the percent DS, Apple's not overbought now, and this is all short-term trading. No one said that Apple was in a bad trend. No. What we did say is, why are we making money and the public is going to, they all rushed in the trade. They all got crowded in here, and we took the other side of that short today. And the pro trading students witnessed it. And they were told yesterday, Apple, Goldman and Goldman Sachs, Apple and Google on a 60-minute level from that great run over here, nice long, was just overbought. And it had to come down. And it did. And this is about what it's about, folks. They got crowded, and you went short, and you've crossed over here, the green over the black. The MACD bar, which is this indicator down here, is dropping, mathematically dropping. You can see it. It went from 3.42, 3.36. Now it's at 3.16, for Christ's sake. And you went from 95.88 in that 60-minute bar on the percent DS down to 89.56, down to 78.65. And look at here, people. You don't see 413 on the CCI. For Christ's sake, to 270, to 194, to 151, to 100, and now it's still only positive 44. Whenever a CCI gets to that kind of peak, right along with the percent DS, time to short to farm. And you get paid, and that's the Google.